Welcome back. You're with us on Trading Hour. The market is going absolutely nowhere. Total flat trends. It's so choppy, but choppy in what, about a 70 to 80 point band. That's what this day has been all about, at least up until now. The Adani group of stocks is still holding up. So that's one headline you can still go with. Adani Enterprises is up almost 15%, ports 6.5%, transmission, Adani Green. Most of the Adani stocks are up and about today. Those are some of the major trends worth perhaps highlighting. Adani Total Gas, by the way, is an exception to that otherwise blanket statement. Total Gas is the one stock that's still in negative territory. Okay, as promised, let's get to that conversation with the management of JK Paper. The company reported a very strong set of numbers for the third quarter. The company posted a 60% jump in the revenue and 120% growth in profits. The margin also improved to about 34% from 24% on a year-on-year basis. We have with us now JK Paper's President and Director A.S. Mehta to take on some questions. Mr. Mehta, thank you very much for joining us on the show. Phenomenal quarter, really. Look at that top-line growth. Look at the jump at the EBITDA level as well. Now, is this entirely a function of very strong pricing? Or is this something that can perhaps sustain as we go into Q4 and into the next year? Give us a breakup into how much of this is volume-led and how much is just straight out because of higher prices?
See, something around 30 to 32% is because of the volume. As we commissioned our packaging board capacity last year, January, and so that capacity is now being operated at somewhere around 90%. So that's a volume addition, predominantly packaging board and also some writing printing paper from our Sirpur paper mills. So the volume is something around 30-32%, and rest is the pricing. Of course, the prices and across all the categories were higher compared to last year, the same period.
Okay.
And when you talk about the margin, I would say that the prices of packaging board has started coming down. Coated paper has coming down. So in fact, there is a drop in prices in these two categories. But writing printing paper, the prices are fairly stable. There is no drop. So in going forward, this Q4 also, I would say that NSR would be lower in these two categories, coated and the packaging board. And that will certainly have some bearing on the margin.
So Q4 margins would be lower than Q3 margins?
I think so.
And by how much, sir, approximately?
I mean, it's very difficult at this stage because to what extent the packaging board market will behave, because right now the packaging board, domestic as well as the export, both these markets are not very favorable at this point of time. So the total margin will be defined by the packaging board trend in coming months, February and March.
All right, that point is well taken. Thanks for joining us, Mr. Mehta. This is Pavitra. You know, earlier you had guided for around 5,500 to 6,000 crores in terms of FY23 revenue. If I'm looking at the around 1,600 crores that you've done in Q3 as well, it looks like you're set to sort of cross that for the year. Would you like to revise your revenue guidance?
Yes, I would say that we should be crossing 6,500 now for this fiscal year.
Okay, you will be crossing 6,500. Can you tell us what part this is really going to be led by? Where are you seeing the maximum demand come through? Because like you were mentioning, exports clearly is a little bit soft, but can you tell us where you are seeing good demand?
See, I would say that, of course, there is some drop in the demand of packaging board, but still, this is likely to revive mid-February and March. And predominantly, the top line, it will be because of the packaging board and certainly the prices of writing and printing paper. These two factors will be important for our crossing the 6,500 crore revenue. Also, there will be quarter consolidated revenue of our corrugation business, because now this Q4 full quarter consolidation will happen.
Mr. Mehta, how are input costs behaving? I mean, you're guiding for a slightly softer Q4 in terms of margin. How are inputs behaving, and will you have the pricing flexibility to pass on any raw material inflation?
See, I would say that input cost in the Q4, I would say that it will be fairly stable, or it will be in line with the Q3. So I don't foresee any major input cost increases in Q4 compared to Q3. So there is no question of passing or doing anything. The prices of product will certainly depend on the margin, the market demand of the different categories.
Could you tell us a little bit more about this packaging board? By how much has demand come off compared to, say, what it was 3 months ago, 6 months ago? And what is the reason for that? And how much does it contribute to your overall revenues and EBITDA?
See, I would say that the packaging board demand, the contraction is something around 5 to 10% compared to the last 3 months. And predominantly it is because of the export-driven conversion from Indian converters as well as the pharma sector, because the demand of pharmaceutical, the segment in our packaging board is slightly lower this quarter. So these two are the factors of lower packaging board demand, which I would say that now this is going to be a normal period after 15th of February.
Okay, that is on packaging board. Just one final question on your market share. The last time we spoke, you had told us that there's an increase to 28% from 24%. Is there any change right now? What is the market share looking like?
I think it has already crossed 29%. So hopefully 29 to 30% should be the market share in the office paper category.
Okay. Mr. Mehta, I don't know if we have time to squeeze in one quick one. You mentioned that for packaging board, your new capacity that came on stream, you're already running at 90% capacity. What is your blended utilization and what's the capex plan as you look at the next financial year?
See, the blended utilization, I would say in overall our capacity utilization is 104%. And the packaging board, once we start hitting 100%, which I hope to do next quarter, so our overall utilization should be over 105%. And the capex, I would say that right now, since this was a 2,000 crore only last year, so now whatever we do, it is not in writing, printing and packaging right now. We need to invest in the corrugation business now. And thereafter we'll see what to do with the white segment.
Mr. Mehta, we leave it at that. Thank you very much for joining in. That's JK Paper, still on track to hit 6,500 crores of revenues in FY23, but they're watching the packaging board business. That's come under a bit of pressure. Demand is down 5 to 10% for the packaging business, and that's because the pharma sector contribution to the packaging business has been a bit muted, and this could weigh on Q4 margins as well. The stock is a bit subdued today, down 1%, but in the last 1 year, JK Paper has rallied nearly 70%. Get into a break. On the other side, we'll get you details of CNBC-TV18's RBI monetary policy poll ahead of the big decision tomorrow.